Okay, I thought we'd take a look at the statement of cash flows by itself just to get a better idea about exactly what's on it, because this statement is a little bit different. You figure with the balance sheet, a balance sheet number one, balances, okay, assets equals liabilities plus equity, and it includes assets, liabilities, and equity accounts, and then the income statement has revenue minus expense on it. Statement of owner's equity shows the changes in owner's equity, but the statement of cash flows takes all of our cash inflows and outflows and classifies them by operating activities, investing activities, and financing activities. And to me, the best way to think about this is to think about a balance sheet, and your operating activities are, if these are current assets, and this is current liabilities, your operating activities are these two, okay? So that would be accounts receivable, accounts payable, inventory. Okay, so changes in those are accounts that you use in your everyday business. All right, then investing activities would be long-term assets, purchase of equipment, sale of equipment, purchase of a building, sale of a building. Okay, purchase of maybe a long-term investment, and then the cash from the sale. We're only talking about cash. And then on the equity side, we've got financing activities, and this would be long-term debt or equity. So cash proceeds from the sale of bonds, cash proceeds from the sale of stock. All right, and the descriptions of these accounts are a little bit different. All right, so we've got operating activities first, then investing activities and financing activities. And these are cash receipts from customers. So in some ways it's sales, except it's just cash sales, okay, or how much customers gave us in cash. So it would also include payments from accounts receivable. All right, now you don't have to prepare this statement. You would the way you would if you were an accountant, but you need to be able to take these descriptions and put them together into a decent statement of cash flows. Okay, so you need to understand something. So cash receipts from customers, cash payments for expenses and payments to creditors, okay? And then we've got the net cash flows from operating activities right here. For investing activities, they purchase land, cash payments for the purchase of land, and that would be $20,000 outflow, so it shows as negative, and this would be an investing activity, okay? And then over here for financing activities, the owner put in some money, then the owner withdrew some money, so we've got cash flows from financing activities, net cash flow is $23,000. Okay, so these would all be financing activities here. Okay, now in this case, in the textbook, this net total tied out to the cash on the balance sheet, that is not the way it really works, all right? This is maybe just the first month of operations or something like that. So that's the I don't know, it still doesn't make any sense because there still should have been a beginning balance in cash, unless that beginning balance was zero. But don't worry about that, all right? Just understand that you've got three areas: operating, investing, and financing. Operating activities have to do with your cash, current assets and current liabilities. Investing is long-term assets, financing, long-term liabilities, and equity. Okay,